After starting this module, you shall be able to know the meaning of accounting standards, identify the problems faced in standard setting process, understand the problems in harmonization with international accounting standards, analyze the current scenario of standard setting in India. Now we will discuss about what is the meaning and definition of accounting standards. Accounting standards are essential to the efficient functioning of the economy because economic decisions which influence allocation of resources rely heavily on credible, concise and understandable financial information. Ideally, such information should make it possible for investors to evaluate the investment opportunities offered by different firms and allocate or ration scarce resources to the most efficient ones. The basic objective of accounting standards is to remove variations in the treatment of several accounting aspects and to bring about standardization in presentation. They intend to harmonize the diverse accounting policies followed in the preparation and presentation of financial statements by different reporting enterprises so as to facilitate intra-firm and inter-firm comparison. Littleton defines standard as follows. A standard is an agreed upon criteria of what is proper practice in a given situation, a basis for comparison and judgment, a point of departure when variation is justifiable by the circumstances and reported as such. Standards are not designed to confine practice within rigid limit, but rather to serve as guidepost to truth, honesty and fair dealing. They are not accidental but intentional in origin. They are expected to be expressive of the deliberately chosen policies of the highest types of businessmen and the most experienced accountants. They direct a high but attainable level of performance without precluding justifiable departures and variations in the procedures employed. Accounting standards do not aim to put accounting in a straitjacket. Rather, they attempt to limit the theoretically possible flexibility and to give practitioners realistic working conditions. If the individual circumstances of a particular business firm are such that an existing standard is not suitable, then alternative practices regarded as more suitable can be adopted. Now we will discuss about accounting standard setting bodies. The term accounting standard are written statement issued from time to time by institutions of the accounting profession or institutions in which it has sufficient involvement which are established expressly for this purpose. Such accounting institutions are currently found in many countries of the world. For example, Accounting Standard Board India, Financial Accounting Standard Board USA, Accounting Standard Board United Kingdom, Accounting Standard Committee Canada, etc. At the international level, International Accounting Standard Board has been created to formulate and publish in the public interest basic standards to be observed in the presentation of audited accounts and financial statements and to promote their worldwide acceptance and observance. Now we will discuss upon issues in setting accounting standards. Issues faced in standard setting may vary from country to country as there may be differences in economic, legal, social and accounting environment. The common issues in standard setting are discussed here. The setting of accounting and reporting standards often has been characterized as a political process. Standards, particularly changes in standards, can have significant differential effects on companies, investors and creditors and other interest groups. A change in an accounting standard or the introduction of a new standard can result in a substantial redistribution of wealth within our economy. The accounting standard setting body must consider potential economic consequences of a change in an accounting standard. Some issues have been discussed as under. First, The existence of multiple accounting agencies has made the task of standard setting more difficult. In India, company financial reporting is influenced by ICAI, MCA, SEBI, etc. No one agency has jurisdiction over the entire area of accounting standards. In other countries also, there is plurality of accounting bodies. For example, in USA, there are organizations like Securities and Exchange Commission, Financial Accounting Standard Board, American Institute of Certified Public Accountants to deal with accounting matters and financial reporting. For India, the multiplicity of standard setters leads to delay and lack of direction. The second issue is the increased complexity of the fair valuation model as prescribed by international standard requires extensive valuation, objective professional judgments, integrity and uniformity of approach, which may not be easily achievable across all countries, particularly in the emerging economies like India. It may be noted that in several important areas where the Indian standards are implemented, the accounting treatments in those areas could lead to differences in the restatement of accounts in accordance with IAS. It would be unrealistic to expect to determine standards without such difficulties, and the best way to deal with them is to admit their existence rather than pretending to ignore them. The next issue is conflict in accounting theories. At present, there is not a single theory in accounting which commands universal acceptance and recognition. Accounting theories of income measurement, asset valuation, either historical cost or fair market value, capital maintenance have seen many developments. We cannot say what is the best way to measure profit. There is no best answer. The different terms like profit, wealth, distributable income, value, capital maintenance and so forth. The next issue is the absence of a conceptual framework. Absence of a conceptual framework is not conducive to standard setting and improved financial accounting and reporting. The Indian GAAP has conceptual differences with IFRS, and a legal and regularity frameworks need to be amended for us to adopt IFRS as written by the International Accounting Standard Board, the standard setting body of IFRS. Now we will discuss upon international financial reporting standards. To allow the gains from the global economy to be fully realized, it is argued that accounting policy should be standardized among nations. This harmonization of accounting standards will help the world economy in the following ways: by facilitating international transactions and minimizing exchange cost by providing increasingly perfect information, by standardizing information to worldwide economic policy makers, by improving financial markets information, and by improving government accountability. However, some specific points are presented below addressing the rationality of harmonization. A harmonization of accounting policy would help provide a level playing field globally. Regulators and auditors will be receiving the same information, facilitating the evaluation process. In the absence of free trade, international accounting standards will allow nations' tariffs, quotas, and other trade restraint mechanisms to be more accurate and less risky for those engaged in trade. Investors and managers will be able to make more valuable decisions. World resources will be better managed and allocated. There is a strong case for convergence and harmonizing accounting principles and standards at the international level. In future, international accounting standards, specially formulated by IASB, will be of dominating importance in the presentation of company financial statements and related financial disclosure. This requires a high degree of mutual international understanding about corporate objectives, financial reporting objectives, and harmonization objectives. The convergence would have significant impact on future developments in corporate financial reporting elsewhere. With these Indian accounting standards, India will be adopting some of the latest global standards before the rest of the world does. While India has been working on IFRS convergence, IFRS itself as a body of standards continues to evolve. India's efforts towards convergence with IFRS is a giant leap forward and to make Indian standards contemporary. Ability to state full compliance with IFRS would be relevant for several Indian companies that are raising funds from global investors, including from leading global capital markets. The MCA and the ICAI have done laudable efforts towards minimizing the curve-outs. Now we will discuss upon the obstacle faced in convergence and harmonization of accounting standards. Many difficulties have been faced in the harmonization program commenced by international agencies, especially by IASB. These difficulties may be grouped as follows. The first is difficulties in development of standards. The next, difficulties in the enforcement of standards. First, we will discuss upon the difficulties faced in the development of standards. The first is provincialism. Many countries hold provincial outlook in many spheres. As long as people believe that their own views are superior to those of others, known or unknown, it is hardly possible to reach agreement on a common solution. The French would like to have the new global system patterned after the French system, the American. Each country believes its system is the best and is reluctant to adopt a system it perceives unsuitable. The second is difficulties in economic and social environment. Harmonization is adversely affected by the differences in economic and social environment in which accounting has a role to play. In different countries, there is a different view on what is or should be the primary purpose of financial statements. In some countries such as America, the investor decisions are considered to be most important. In others such as Germany, it is the creditor. In France, the information needs of the government play a major role. These differences in purpose which are in the minds of accountants lead to different views on what is appropriate accounting treatment. Some operate from an environment of extreme conservatism, others from an environment that borders on creative accounting. The third issue is the diverse accounting practices. Variations in accounting practices hampers harmonization. Each practice may have its own jurisdiction and well be understood in the national environment. AISP is operating in an environment of conflict between ideals and practicality. The next issue is the gaps between developed and developing countries. In many areas, developing countries differ from those of developed. In fact, most developing countries had little chance to evolve accounting systems which truly reflected the needs and circumstances of their own societies. Their existing systems are largely extensions of those in developed countries. We must not assume that what might be good accounting for developed countries will automatically be economically relevant and good for emerging nations and the process of development. Critics of harmonization in the developed countries argue that these developing countries have few indigenous private investors. Economic activity is to a considerable extent in the hands of government agencies and financial information should be geared primarily to their needs rather to the needs of private investors. The next issue is the other regulations and accounting standards. In respect of banks, financial institutions and finance companies like Reserve Bank of India pronounces policies among others, revenue recognition, provisioning and asset classification. Similarly, the Foreign Exchange Dealers Association provides guidelines regarding accounting for foreign exchange transactions. Since the Securities and Exchange Board of India is an important regulatory body, it would also like to have its own accounting standards, and in fact, It has started the process by notifying cash flow reporting format. It is also in the process of issuing a standard on the accounting policies for mutual funds. It appears as if several authorities in India are keen to have a say in the matter of framing accounting rules of measurement and reporting. The tentative and half-hearted legal and regulatory intervention in accounting in India has come in the way of development of robust, continuously evolving and dynamic accounting theory and standards. Now we will discuss upon the difficulties encountered in enforcement of standards. After establishment of international standards, difficulties may arise at enforcement level. These obstacles have to be overcome in order to achieve adoption of and compliance with international accounting standards. Such difficulties are: first, tax laws. Harmonization faces problem due to differing tax laws. Enterprises are required to draw up one set of financial statements for tax purposes and for financial reporting purposes. Government has an overriding interest in profit as computed for fiscal purposes. Tax laws often prescribe in detail how profit should be measured. In this framework, it is unavoidable that business is more concerned about tax saving than it is about accurate determination and reporting of financial performance. The Income Tax Act does not recognize the accounting standards for most of the items while computing income under the head profit and gain of business or profession. We cannot hope for improvement and harmonization of financial statement unless all ties between tax accounting and reporting to the public are cut completely. Deductions and exemption allowed in computation of taxable income, on the other hand, is a matter of fiscal policy of government. Thus, an expense required to be charged against revenue by an accounting standard does not imply that the same is always deductible for income tax purposes. For example, depreciation on assets taken on financial lease is charged in the books of lessee as per accounting standard 19, but depreciation for tax purpose is allowed to lessor, being legal owner of the asset rather than to lessee. Likewise, recognition of revenue in the financial statements cannot be avoided simply because it is exempted under section 10 of the Income Tax Act 1961. The next is disclosure laws. Another difficulty is the law regulating financial reports to shareholders and the public. In some countries, this law provides great details both on disclosure and on measurement. In this environment, the notion of true and fair reporting loses importance and the primary purpose of preparers and auditor come to comply with law and regulation. In such a country, international accounting standards will not be adopted unless they are incorporated in disclosure laws. The third is existence of local standards. In many countries, accounting standards have been found formulated by the accounting profession or government agencies or jointly by both. Seen on the national level, this may have merits, but seen from international viewpoint, there is bound to arise conflict between these national systems. Once there are national standards, it appears to be rather difficult to adopt them to international consensus. This is unfortunate for international enterprises who address their reports to users both at home and abroad, and it reduces the credibility of their statements abroad. The next is unhelpful corporate attitudes. Standards are basically meant for business enterprises. The enterprises whose affairs are purely domestic hold the view that international standards are none of their business. The next is different economic environment. The economic environment and trade customs and practices prevailing in India may not be conducive for adoption of an approach prescribed in an IFRS. For example, in a country whose markets do not have adequate depth and breadth for reliable determination of fair values, it may not be advisable to follow fair value based approach prescribed in certain IFRS. Certain IAS oblique IFRS assume an economic environment with mature market. Now let us discuss the summary. Absence of conceptual framework, different interpretation, political bargaining and multiplicity of accounting and reporting agencies have put a lot of obstacles in the path of standard setting. Globally, as we are moving towards one common accounting language, we face difficulties in harmonization of accounting standards. As we know that it is an age of globalization, there is no conceptual boundary among the nations. And this is not difficult at all to choose superior standards through the current process of setting the standards. The attainment of a single set of accounting and reporting standard is the demand of the time. The common impediments are lack of harmony between tax law and company law, disclosure law, different economic environment of nations. We will fail behind if this harmonization process takes more time. In Indian perspective, it will continue to adopt Indian Accounting Standard or IFRS in the near future with few modifications to cater to the requirement of local climate. Setting IFRS under new regulatory framework is also a notable success in harmonization.